Hello and welcome to Market in a Minute, May the 12th, 2025. Yet another one of those rare days when all of Asia Pacific markets are in bright green. But then a lot has been happening, especially if you're looking from here. There's the ceasefire, there's the IMF nod, there's the interest rate cut, there's also substantial progress on resolving the circular debt, and there's even the US-China trade thaw. A lot of external factors acting on the markets all at once, a confluence of exogenous factors. Very rare. But does this mean that we're already back to good times? Let's not forget that the market, especially the Pakistani market, remains fragile and a lot is still to be seen. So let's start looking. So here's the daily chart. Look at the big gap up. I guess you would have to win a war to get the market to open with a gap of almost 10,000 points, erasing almost 12 days of losses even before the first trade of the day was placed. All of this is overnight action. But there's more to it. For most of the day, today's trading candle was not green, it was red, and it only rose enough in the last hour of trading to form what is called a dragonfly doji. Look at the hourly chart for more details. The shaded zone shows the first 2 hours of trading when the market dropped, and it stayed within this zone till the very last hour when it moved out of it. So despite the big gap up in the optics and the euphoria, the day's trading also needs to be seen and understood and interpreted rightly. Now, going forward, the next two resistance points are very important. One is here, the April 22 high, and the other is here, the April 4th high, the highest point in the market. Now traders are betting on a fast rush towards this point, but a few points are very important. First, volatility as measured by ATR has risen even further. It is now 3610.93 points, implying that it would not be improbable for the market to move as much in either direction after it opens tomorrow. This high volatility means higher overall risk as well as higher risk per trade. So, the post-war euphoria notwithstanding, conventional wisdom still suggests that traders should expect wide price ranges across sectors and stocks tomorrow, reduce position sizes, widen stop losses, and be very, very cautious with leverage. But more importantly, from our point of view, we're looking at this RSI. It has still risen enough to stay below the 60 mark, which is a very crucial threshold when the market is moving out of a perceived bearish zone to a bullish zone. So while the market rushes for the top two resistance points, it's also very important to keep looking at the RSI and how close it comes to the 60 line and whether it crosses it or not. Otherwise, going by the Bollinger Bands, the market was outside the lower band for a few days, snapped up so hard that's now above the midpoint. And also looking at the Donchian channels, the market made 20-day lows for consecutive days and then snapped up. This means this is a very, very volatile market. Right now, it has been taken over by euphoria. It has been taken over by sentiment. There's also fundamental improvements with regard to the IMF program, with regard to inflation, etc. But a lot remains to be seen. So be very focused on the market and keep a very close eye on it, especially for the next few days. Thank you.